Yeah, hello guys, welcome to this video. So on this video, I'm going to be telling you all about dynamic highs and lows. We're still on basic market structure. So if you want to know how to keep up with the trend, how to fully utilize the trend of the market, be it downtrend or uptrend, then you will love to pay attention to this video because this video is for you. So let's proceed. So we're talking about dynamic highs and lows. So dynamic highs and lows, I'm going to divide them into two different categories, which are where is text tools, okay? Which are number one, the protected levels. Protected low or protected high. Let me just call it the protected levels. Then number two, we have the weak levels. So first off now, we'll talk about the protected levels. What are protected levels? Protected levels, I will define them as a zone or point whereby you expect price not to go beyond, be it a low or a high. And on this particular video, I'm going to explain protected level as a zone whereby you expect price not to go beyond, and it's also a zone that sponsors the break of a previous high or a previous low. That's it for this video. But on a more advanced class, whereby we'll be treating about liquidity, protected level is also a zone that swept liquidity of a previous zone and then sponsors the breakout of a previous level. Let me write that down for you all. Is a high or low that sponsors the break of the previous level, which is the previous high or low, you understand? Just depending on what trend the market is on. And in other words, you could also say a protected level is a low that swept. I'm just using low. It might either be a high or a low, but I'm using low for this tutorial. So it's a low that swept liquidity of the previous low. So you understand? So one thing, this is like the first definition when using it on a basic market structure. That's you're trying to trade the trend of the market. This is when you use this number, the first definition of a protected level. But when you're trading on a much more advanced market structure, whereby you tend to look for liquidity, that's when you use this definition. The protected level is a low or high that swept liquidity of the previous low. So let me put this one side. And one thing that these two definitions has in common is that you don't expect price to go beyond that level. You understand? You don't expect price to go beyond that level. because it's protected. Why it's called protected? That you don't want price to go beyond that level. You get. So now let me give you a simulation of price charts. So now we have this structure. Is an uptrend. So this is a simulation of an uptrend market. So I won't even tell you that this zone right here now, this zone right here is a protected level. Why is it a protected level? Because it was the low that sponsors the break of this previous high. You understand? It's the low that sponsors the break of this previous high. And after you've seen this breakout, what we expect is that we expect price to come in between this high and this low to get that retracement and look for a point of interest and buys off and continue the trend. Because we don't expect price to go beyond this level. We don't expect price to go beyond this level, because this level now is not a protected level. So what we expect price to do is to come here, retrace, look for a valid zone or point of interest, be it order block, fair value gap, breaker block, whatsoever you consider your point of interest. That's what we expect price to do. You understand? So when price gets to this point now, we don't expect price to go beyond the zone. We expect price to just get its retracement from this point and then continue its movement to the upside. So let me show you guys an example on a downtrend. Let me just switch it off. Let me switch it off and invert scale. So now this downtrend, this is a typical example of a downtrend market also. So now we have this high, low, higher low, higher high, higher low. And this particular high is a protected level because it sponsors the break of this previous low, thereby making price to create another lower low here. So price is always going to retrace. So we do not expect price to retrace beyond this level because it's now a protected level. Price will only retrace at an order block or a POI, and then boom, it's going to continue its movement to the downside. So now let me look for a perfect example on live charts. Am I going up or down? Am I supposed to go up? Okay, where is the chart? Sorry guys. $0.67. Okay, it should be down. Did that really go up this much? Let me just enter a random chart and see. Okay, right here now we are on gold XAUUSD. I think I can use this point now as a typical example of a downtrend market. So right here now, what do we see? I'm sorry I had analysis on this particular chart, but let me just hide it. So right here now, we are on a downtrend here. As you can see, price starts declining from this point. So we have this lower high, lower low, lower low here, lower high, lower low, lower high, lower low, lower high, lower low, and then price is just going down. Sorry, let me see if I can actually use this tool to highlight it for you guys. No. Let me just go back to that audio SD. Okay, perfect. So right here now we are on odd USD 1 hour time frame, and what do we see here? We see price. This is an uptrend market. Without you looking too much or making much of an analysis, you could actually tell that this is an uptrend market. You get. So firstly, now price was coming down. I'm going to tell you all how price got to this point, and then we had a change of character, change of trend that made price to start going up. So let's start from this zone here. As you can see, price accumulated from this point. Oh, this is an invert scale. No wonder I was I was confused. I forgot I actually switched it off. So right here now we have price accumulated in this zone before the major breakout. So this is where the movement started, although it's an uptrend market. So we saw price create this high, create this low, higher high, higher low. Now this low becomes our protected level. Why? Because this low now sponsors the breakout of this previous high. It sponsors the breakout of this previous high, meaning that we do not expect price to go beyond this level. We do not expect price to go beyond this level. You understand? We do not expect price to go beyond this level. So price came here, it looked for a POI or another block here, and then it went back up and break this previous high. Breaks this previous high. As you can see, breaks this previous high. And what do we have next? We saw price going up, creating series of higher high, higher low, until price gets to this point whereby volatility has reduced and buyers are no more in control of this market. Then what do we have next? We have a change of structure, a change of character. So now, after price have a change of character, let me go back to that simulation before I continue from this point now. Just like I say now, this is a typical uptrend market, price and an uptrend. Before we dive into week low, this is an uptrend market. Then the point whereby price failed to respect this protected level, the point whereby price go beyond this protected level, then that means we've had a change of character because price have broken from this protected level. So now what do you expect after this change of character? Automatically, this zone becomes the new this high here becomes the new protected level because there's a shift in structure. So anytime you see a change of character, automatically the last high before that change of character becomes your new protected level. Now what do you expect after this high becomes your protected level? You do not expect price to exceed beyond that level. You do not expect price to go beyond this zone because there is a shift in structure. So what do you expect now? You expect price to do something like this, then continued movement to the downside because there's a change of character. So you expect price to do this. You understand? So on this particular chart now, we saw that price had a shift of structure. After that shift, what do we see? This last high becomes our new protected level automatically. This last high here becomes our new protected level. Why? Because it was this high that sponsors the break of this previous low. So this high that made this market to have change of character, a shift in structure. So now what do we look out for next? As price gets to this point, we'll be anticipating price to retest, to retrace, and as you can see, price actually reacted from this point here, this other block here, and then boom, it continues movement to the downside. You get. So that's it for protected level. Protected level is just simply a point that you don't expect price to go beyond. And when trading a protected level, this is a protected level, this is a protected level. So when trading a protected level, all you have to do is to look for a point of interest. A point of interest, be it fair value gap, whatever you consider a point of interest. This is not a point of interest session. So then you take your entry at that particular point of interest. Let me say, okay, price, you saw a breaker block here. Then you take your entry from here. Then your stop loss should just be below this protected level. And then you might choose to target the next week low or the swing structure. You understand? But your stop loss should always be below the previous protected level. So now, what I'm saying here is that, for example, now, we have an uptrend market like this now. Price is at this point. This low here becomes our protected level. So we'll be looking for buy because the market is obviously an uptrend. We'll be looking for buys. So anything that is going to make price to get to your point of interest. Let me say there's an order block close to this point here, and it's taking your entry from this particular order block here. What you want to do is to put your stop loss. Below this protected level. Then you might choose to target this previous high, or maybe you want to target the swing structure, maybe the swing high of the current market structure on that particular pair that you're trading on. You understand? Your stop loss should always be below the protected level. Okay, so that's it. Now, this definition, this explanation I'm giving you all is for the first definition of a protected level. Now, to give you a much more clearer explanation on the second definition, whereby I say a protected level is a low that swept liquidity of the previous low, I will use USDJPY because I think that's the pair that I have a very, very good setup, and I even send this setup to my group. So now, let me move to the 4-hour time frame. Just like I said, a protected level is a low that swept liquidity of the previous low, and then you don't expect price to go beyond that level. So right here now on USDJPY, this is a very mad setup and a sniper entry I got here. I send this to the group. So after seeing that price is on a downtrend, obviously, and then boom, we have a change of character here, signaling that price should now be on an uptrend. Maybe I'll see price, we expect price to create series of higher high, higher low. So that's exactly what price did. So after I saw that price is going up, and when I got this setup, I think price was just around this point here when I got this setup. So what made me took this trade was I saw that this low here, price swept liquidity. You can see this weak candle here. You can see this weak candle. Price swept liquidity of this previous low, making this low a very, very much protected level because every highs and low in the market are liquidity. So anything that is going to make price to go down, to like retrace, because obviously this is an uptrend market and I expect price to retrace. Price is always going to retrace. So as I saw that price swept liquidity of this previous low, this low, I didn't see any valid sweep of liquidity. This is also a low, but I didn't see any valid sweep of liquidity. But this right here was a low, and then this is also a low too. But this particular low swept liquidity of this previous low, very obvious. So that was why I took this setup. Initially, my stop loss was supposed to be below this point here. That's for a more that's just the major scenario of this setup. But to get a more refined trade entry, I put my stop loss just below this my point of interest here. I will explain this more better in point of interest class, why I actually put my stop loss at this point and not below the protected level to get a more refined setup. So this is typically what you need to look out for when using the second definition of a protected level. You always want to trade from a zone that price swept liquidity off. That's going to give you a very, very much solid trade entry, and you're going to be more confident. Anytime I see this setup, I'm always very, very much confident in taking that setup. So that's it for protected level. Now let's move on to week high and week low. So what are week highs? Let me get eraser to clear all this. Eraser. Hold on, guys. Okay, so with that being done, now what are weak levels? Weak level is more of a target level. They are the point that we target anytime that we saw price, anytime that price is retracing to our protected level, is a point or a high or a low, depending on the trend of the market, that will expect price to smash. It's more of ERL, like external range liquidity, but that is going to be taught in our liquidity class. So what are weak levels? Let me give you an example. So we have this uptrend market now. Okay. All right, now, so just like I've said previously, all these zones, all this high that sponsors the break of this previous, all this low that sponsors the break of this previous high are all protected level. All these are protected level, protected level, protected level, and vice versa. So now weak highs are more of the target levels. Weak high is a high or is a level that we expect price to go beyond. We expect price. Now, protected level now is a level whereby we don't expect price to go beyond. But weak level are levels that we expect price to go beyond. You understand? So they are more of target level. They are the level that we target when using our entry. That's more of our profit target level. You understand, Ko? So right here now, after we've gotten our entry at our protected zone, we've gotten our entry here. Now we've gotten our entry here. Now, our target is going to be at this previous high. So weak level is a point that we expect price to take out. This previous high now, we'll target it because we expect price to break that high, because this is a high that price, this is a high that was sponsored by a protected level. Any high or low that is sponsored by a protected level is a weak level, and you expect price to go beyond that level. You understand? Any high or low that is sponsored by a protected level, you expect price to go beyond that point. So what sponsored this high? It was this protected level here. So if we take our entry now from this point, we expect price to go beyond this previous high. So this point now, all these highs here are weak high. All of them weak high. Weak high. All of them are weak high because we expect price to go beyond them. These are our target levels. When taking our entries, we usually target all those points for our take profits. You understand? All these are weak high until we get to a point whereby there is a change of character. There is a shift in structure. Now, I'm coming. Let me highlight this shift until we get to a point whereby there is a shift of structure. Now, this protected level, this level was previously a protected level. You get, because it sponsors the breakout of this high here. Now, automatically, when we see a shift of structure like this, a shift in market structure, this new level, this new high that we expect to be a weak high before, this was expected to be a weak high because we expected price to retrace from this protected level. We expect price to not go beyond this level, but that moment whereby price failed to go beyond this level, whereby price failed to respect this level and goes beyond it, automatically this zone becomes a protected level and not a weak high. This becomes a protected level and not a weak high. Then all these previous protected level are now our weak level, because we expect price to take them out. Because we are now on a downtrend market. We expect price to take all this low out because we are now on a downtrend market. You understand? We are now on a downtrend market. So we're expecting price to keep on heading lower. As price is going down, this now is a protected level. These are protected high because it's the one that sponsors the breakout of this previous low. Now, as we are seeing that price is actually declining, it's moving down, and then all these previously protected level are now our weak targets. You understand? So I think that's basically it for this video. Okay, let me show you an example on the live chart also. So right here on the odd USD, we saw that price was on an uptrend, and then we now have this shift right here. I don't know if you all can see this. Let me go to the 2-hour time frame for more clarity. So we have this shift of structure right here. So guys, we have this shift, and now immediately we'll see this shift now. As you can see, price was on an uptrend before, then boom, it gets to this point here. Then what do we see? We'll see price fail to go beyond this point, and eventually it break below. We saw price, this was the previous low here. We saw price went up here. Price went up here, failed to break above this previous high, failed to create a new higher high, but instead what do we see is a lower low. So this level now becomes a protected level, but this was previously a weak level, but now is now a protected level because price has had shift of structure. So what are we going to be anticipating from now on? What do we see next? We see price goes to this point, and now this previous level too, this previous high here is now a protected level. Why is it a protected level? Because it sponsors the break of this previous low. So now we do not expect price to go beyond this point. What do we see? We saw price kept on declining. You see, kept on going down. So that's basically it for this video. I hope you all find something insightful and you learn something today in this particular video. See you all in the next session, and bye for now.